The Bybit hack that was recent and stuff, and you hear about stuff like this, and it just doesn't seem reasonable to expect the average person to like bear responsibility for this kind of stuff.
It's a big paradigm shift. We spent years convincing, our previous generation to move money to an institution that's going to hold your keys, security, passwords, and hold your money all together. So it took a generation for that convincing to happen. Now, this generation, we're now convincing that we need our own keys back. We need to be responsible for something that we were largely not responsible for many, many decades. A lot of people talk about crypto, but they don't really know crypto. They haven't gone through more than one cycle.
Hi, my name is Lawrence Linker. I'm an investor, builder, and executive in digital assets. When I first joined the industry 5 years ago, I had a lot to learn. And I found that I learned best by just having casual conversations with smart people actively working in the industry. I've had the pleasure of meeting some incredibly talented folks in that time, and the Coinversations podcast is my invitation to you to join me in these conversations so that we can both continue learning. Of course, nothing said by me or any of my guests is financial advice, and you must do your own research before making any investment decisions. Today, I'll be speaking with Kanny Lee. Kanny is the founder of SecondSwap, a blockchain protocol that enables secondary markets trading of digital assets. Kanny also founded Web3 ventures firm Libra Capital in 2019 to participate in the growth of the digital asset ecosystem across Asia. Prior to this, Kanny was Group CEO of dtcpay, a regulated fintech company in Singapore, and served as the managing director of OSL, a publicly listed institutional digital asset brokerage, where he successfully led its overseas expansion, including the launch of its Singapore business in 2019, while navigating the emerging regulatory landscape for digital assets. With over 20 years of experience in financial services across US and Asia, Kanny has been instrumental in building Web3 communities among institutional partners, regulators, and industry associations to promote the mainstream adoption of digital assets. But without further ado, let's talk to Kanny. Kanny, how are you, man?
Doing great, Lawrence. Glad to be here.
Good. Glad to have you with me. So, Kanny, I was particularly excited for this conversation because most of the people that I speak to in this podcast are people that are, of course, working in the industry, leading in the industry, but are also like my friends. And you are someone that I've seen around like a million times, but I don't know that we've ever had like a one-on-one before. So I think it's kind of interesting. Well, first of all, it's great to finally have a one-on-one with you. And then I think it's kind of interesting from like a voyeuristic perspective to give the audience the chance to look at what a first one-on-one between two people who kind of know each other through the industry but have never connected directly before might look like. If that makes sense.
Yeah, I think that's fantastic. Let's spend some time to get to know each other in a very public way.
Yeah.
You work around this industry for quite some time, and you do have a lot of what we call transient conversations with people. You've never really scratched the surface, and over the years, there's a number of people like yourself that I would love to have a sit-down conversation with, where it's uninterrupted, it's not scheduled for 25 minutes, on the hour. And it's something that we can really talk about, what we learned, what the most difficult things that we're facing every day is, and what the success looks like for ourselves, because it comes in many forms, and especially in the industry that we're in. It changes all day, changes all night. You wake up one morning and all of a sudden everything's red. The next day, everything's roses, right? So.
Yeah, I feel the exact same way. So, Kanny, maybe we can start. Just tell me a little bit about you. I mean, I know a little bit of your professional history. I think for a long time, like I always knew you as like the OSL guy, and then you were the CEO of dtcpay. So, but just maybe tell me a little bit more about just who is Kanny, the man.
The person. All right. Yeah. Let's get down to it. I'm a native New Yorker. I was born and raised in the U.S. I moved to Asia right after the global financial crisis, about 2009. and just stayed out here ever since afterwards. I lived in Hong Kong for about 8 years. Saw a lot there. Lived that life. It was great. Sort of Hong Kong in its heyday. Made some really good friends. Did some good business, and then made my way down to Singapore about 8 years ago. A lot of people told me about Singapore. It's a great place to live. It's tropical. It's really really hot, and it's still true. There's no season still here today. Had a family, brought the kids out here, and then planted the roots in Singapore for the last 8 years. And luckily for myself, a lot of business, especially in our industry, has come to Singapore as sort of the headquarters for across Asia. So benefited from just being at the right place at the right time is what I would say.
Yeah, I agree. It was interesting. I also I came to Singapore with a financial services role, broke out to do something completely different entrepreneurially, and then had always been interested in crypto and just happened to be kind of in the right place at in the right time as a lot of like crypto energy shifted into Singapore. So I kind of like I'm part of that story as well. Very cool. Well, look, thank you for sharing that. And maybe could you tell us about like how your crypto journey started?
Yeah, I mean, I started like most people, like just a little arm's length away from it. A lot of things are happening, not really quite sure what it is, or then having someone introduce it to yourself, and you're like, oh wow, okay, it's something interesting. There's a lot that I don't know, and a lot I'm still learning. But essentially, I started probably back 2013, 2014, when I had some friends launch some businesses around Bitcoin, and I got introduced to it. About this time of Mount Gox,
Mm-hmm.
when it went down, is when I
Mm-hmm.
heard, wow, the price action is cheap. It's only $400 for Bitcoin. I'm like,
Mm-hmm.
okay, all right, that's interesting. And I got my first taste of it because one of my good friends launched one of the first Bitcoin exchanges in Hong Kong, and I was there to witness the whole evolution of it. From a startup into a company with I think about 60 people in
Mm-hmm.
Hong Kong at the time, the first Bitcoin exchange, and then watching that grow
Mm-hmm.
from trading magical internet money, and all through the years, and it just stayed alive.
Yep.
Bitcoin stayed there all the way till 2018 when they tapped me on the shoulder and said, "Why don't you come to our company and work with us? We're
Mm-hmm.
looking to grow." At the time, there were up to 80 people, and I joined there as their chief of staff
Mm-hmm.
back in 2018. And this is the other realization that in the market is when I think Bitcoin hit like 12K or 13K all of a sudden back in the
Mm-hmm.
December of 2017, if you recall.
Mm-hmm.
Everyone was going nuts and crazy. It's like, wow, this is it. This is the time. Let's jump right into it. Everyone's making money for no apparent reason. Nothing explainable. And then I started working there, growing the company as their chief of staff. And then Bitcoin went straight down
Yeah.
for the next 18 months. And as you expected, that crypto winter, or even worse, it just plateaued into a slow decline over the next 18 months. And then we started recruiting and building the company and basically hiring, every resource that, had a financial services background in Hong Kong, and just, excavating all the resources that we could, work with us, and building the company into, I think, 200 people or 230 people at our height. And that was sort of where I started getting really, really into learning crypto.
Mm-hmm.
Just realistically, just learning on the job. Not everyone knew what it was at the time. The regulators weren't really paying attention to us. Bankers, just shied away from us. And, "Hey, these are the crypto guys in the room. They're not serious people." That was the attitude at the time. But also, what was great was around 2018, a lot of people were just really jumping into foray into crypto as well. You witness, the birth of or the rise of really, really strong companies like Binance, BitMEX, was really a big force, and even FTX was in its infancy stages at the time, and it was all in Asia and in Hong Kong.
Mm-hmm. Yeah, yeah, absolutely. All right, Kanny, I'm looking forward to digging a little deeper into this with you, but I want to take a moment to just talk about our esteemed sponsor of our podcast, Cast. The future of spending crypto is here. Meet the Cast Solana physical card, your gateway to seamless instant spending. Use your crypto instantly, no spend limits, and instant ATM withdrawals. Tap with Google Pay, Apple Pay, and shop at over 140 million merchants globally. Supercharge your rewards. Shop luxury, fly first class, or even buy a supercar with Cast. No limits, no restrictions. The physical Solana card is here. Secure yours today for just $100. Scan the QR code now and step into the future of crypto banking with Cast. So yeah, dude, it's crazy to me how many parallels there were in our stories. And yeah, you know what's funny is I guess 5 years in, I've finally been in the industry long enough where I feel like people are like starting to show me like a little bit of respect, or like I've been like, I've seen a cycle now, but I've always felt like I've always admired and looked up to guys like you who have seen more cycles than me, but it's just really, it's really cool to to hear your story and realize like how many similarities there were. And so so you were chief of staff, and if I'm not mistaken, so what was the company that you were chief of staff?
I was OSL.
It was OSL, right?
It was now what is known as OSL. We went through a few branding changes. I was a director in the publicly listed company. And they rebranded to BC Group first, and then to OSL thereafterwards.
Got it.
This continues rebranding over time because, as a publicly listed company in crypto, there's very few. I think the other one was just Coinbase. That was the only real comparison.
Yep.
At the time.
Yeah. Yeah, go ahead. And just for the benefit of our viewers, tell us a little bit about OSL. Like, what do they do? What's their business model?
Yeah, OSL was a publicly traded blockchain services company. Had a lot of different type of businesses at the time. It had an exchange. It had a sort of a SaaS business where they white labeled the exchange services. It also ran its own OTC desk as a brokerage across multiple locations, but it mostly headquartered in Hong Kong on the Hong Kong Stock Exchange. And it benefited because it was an early entrant in sort of the institutional trading area where, that definition really didn't take hold until years later, until the banks started coming in. So very early institutional trading firm that just had a lot of different businesses that, made it, really interesting early on, having that infrastructure, being a custodian of digital assets before it became a requirement. Having an exchange, listing all the type of coins, and having traders with all around the world, managing a trading desk 24/7 with institutional participants, and trying to be sort of the pioneer and the forefront of what was really required from a regulator. Before it was actually in vogue. So that was a real sort of early strategy to get into institutional digital assets. And it did come later, through a lot of perseverance, a lot of years later. We were able to partner and work with large financial institutions, such as DBS Bank. One of the big institutions in Singapore was we helped them launch the DBS Digital Exchange here in Singapore. And that was a watershed moment. Outside of Japan, there were no real financial institutions really driving themselves towards digital assets.
Yeah.
And that was something where the team over at DBS and Piyush had a very strong vision for digitalization.
Yeah.
Over the last couple of years, they were the number one ranked digital bank in the world, years running. And so they had a big march towards digitalization. So having digital asset maybe became something that was very easy for them to sort of transition into. And that in itself was a joint venture between the Singapore Stock Exchange and DBS Bank. And that took years and years and years of workshops and seminars and relationship building to get to that point.
Yeah. Yeah, I can imagine. Yeah, and then at some point left OSL, CEO of DTC Pay. Talk to us about that.
Yeah, so at the time, when I was still at OSL, when I moved back to Singapore, I was able to launch the OSL business here in Singapore, and really start dealing with the regulators, face on, dealing with the application, dealing with the changes in regulatory framework and their viewpoints. Not necessarily a large legal sort of framework change, but more so the interpretation and evolution of the stance of regulating crypto assets in Singapore. And every market does feel different and look different. After years of running a exempt regulated business, as they call it, in Singapore, DTC was a good opportunity to apply what I learned because they actually got the license. So when they got the license and they got the approval, they were looking for someone with experience to run a digital assets firm based in Singapore. So and luckily we built a close relationship over COVID. They were actually right down the hall in the same office, and we got to really know each other during that time and build that trust and relationship. So DTC was a bit of a different firm. As a payment services firm, they were looking. I guess they were directly in the line of PayFi was what the terms is what we're coining today, is to work with digital assets and do value transfers across multiple, I think multiple ecosystems and currencies. And that was a little different from the trading aspect where you're basically speculating, taking P&L, maybe borrowing assets or hedging assets. This will be more value transfers and use of stablecoins, which is extremely, extremely hot right now.
Yeah, and how was that experience?
Oh, it was tremendous. Looking at the sort of maybe more of a real world use case of digital assets, we were able to get merchant acquiring businesses to start using crypto in real life. I just heard Cast,
Sure.
your sponsor here, and one of the things that they're doing is something that we also did, offer a multi-currency card
Yeah.
for use of digital assets. The ability to buy a supercar. We built relationships with several dealerships around Singapore to actually enable customers to buy supercars, Ferraris, and Porsches.
Is that a big
Yes, things
is
like
that a big
that.
use
So
case? Is that, is
yeah, yeah,
that
very very strong use case.
uh-huh.
Yeah, so
Okay.
there's a lot of even more so now. The spending of digital assets and use of stablecoins is becoming even more ingrained because of just the use and ease of the facility of it.
Yeah.
Something having USD denominated, it's nice. It's
Yeah.
simple. It's less friction. And it's getting more and more popular, especially when you're dealing with global economies.
Yes.
So
Yeah,
I think that
totally.
that was where we picked up a lot of information and insight as to the world of payments and PayFi, and I think
Yeah.
there's still more to be heard and said about that.
Yeah, yeah, for sure, for sure. But hey, man, I wanna move on to your latest project because I think it's super interesting. And so you recently co-founded a new, I guess, would it be fair to call it an exchange?
Maybe I wouldn't call it exchange. I think when you say exchange, it could be construed as a centralized exchange.
Uh-huh.
Maybe I'll call it more of an application, maybe on
Okay.
the decentralized application layer
Right.
that focuses on something that I used to do. It's actually bringing transparency to OTC markets. Something that I realized when we were trading with counterparts is that the reason why they came to a public listed company was credibility,
Yep.
reputation, and the trust and comfort that they're going to get their money back. That's what
Sure.
people really wanted to ensure, is that if I transfer a lot of money to you, I'm going to get that back. And having a trusted counterpart is especially important in the real world. But as worlds gets more and more decentralized and more virtual, the rise of DApps and DEXs is really taking hold because you have this really nice facility to bring transactions on chain, where it's smart contracts, it's a code that is set up to facilitate transactions. There's benefits to that, things like lowering fees, increasing and accessing pockets of liquidity.
Mm-hmm.
And what I mean by that is that liquidity sits all over the place, but it is very, very fragmented in it because it's still early days. As deep as we're all in over the last couple of years, it still feels really, really early.
Oh,
A lot of
totally. Yeah.
people a lot of people talk about crypto, but they don't really know crypto. They haven't gone through,
Yeah.
like you said,
Yeah.
it's
Well,
more than one cycle.
I
So
think
it's
in
not.
reality, it's still, in my opinion, I still think it's like impossible to use, man. Like, I mean, I use it and I do stuff with it. I'm not the guy that like, we know people who like, and it's sometimes surprising who these people are, but like they're like, um, I mean, somehow like the second some kind of new type of app or technology has come out, they've already like used it. I'm not on that like bleeding edge. But I've used the dApps and all that kind of stuff. And the experience, I think, it's really tough, right? Still, right? Like I have heart palpitations every time, I connect my wallet to a site or sign a transaction or, a stake or bridge or, like yeah, I just think there's a little bit of denial about how cumbersome engaging in the space still is for like a lot of people, like the average person. You know what I mean?
You're not alone. You're not alone. I think friction, UI, UX is more important than people think. Because we're still humans today. We're not still, it's not bot versus bot yet. We're not
Mm-hmm.
AI versus AI agent yet. But we're still humans at the end of the day. And that friction that you mentioned about that heart palpitation about connecting a wallet and actually moving money onto an application, that's still something that I don't think our generation is still really honestly yet ready for. Because if you think about, our parents' generation, the banks were trying to convince them to move money out of their mattresses into a vault, held at a brick and mortar store.
Yeah.
And then
Maybe not
our
our
generation
parents
was
though, right? Maybe our
maybe
grandparents, right? Like
yeah,
our
maybe
parents.
yeah, grandparents.
Yeah. Okay.
Yeah,
Yeah.
maybe not that old as old as I am, but
Yeah. 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 I think we're the same age, Kenny.
are we?
I'm
Yeah, we're
42.
probably about 42. I'm a little bit older. I'm a little bit
Okay.
older.
Are you?
Yeah.
How old are you?
Asian genes, Asian genes. I'm
Yeah.
I'm almost yeah, I'm close to 50.
Are you?
Yeah. Yeah.
Wow.
Yeah.
If you had told
Yeah.
me
So
that you were younger than me, I would have believed you.
actually, I am younger than you, by the way. I'm
Okay.
just kidding.
Okay. Okay. Good. Yeah. Yeah. Yeah.
Yeah.
Yeah.
It's funny when as you get older, you like being told, "Oh, you look so young," and then
Yeah.
you're
Of
too young. You're like,
course.
"Well, I like to
Yeah.
card you.
Yeah.
You look really old." So
Yeah.
yeah,
I had
you can
somebody.
tell someone.
Yeah. I
Yeah,
had
you can tell if
somebody.
someone's old because they're happy that
Yeah. Yeah.
you know.
Yeah. Of course. Although I had someone tell me the other day, I said, "How old do you think I am?" And she said, and I said, she said, "How old are you?" I said, 42. And she goes, "Oh, you don't look 42." And I said, "Oh, how old did you think I was?" And she was like, "I don't know, 39." I said,
So
"Oh,
you
okay."
walked into that one. Yeah.
Like, yeah, come on. You could have like given me a few, 35 would have
Yeah,
been, yeah, yeah,
yeah. You could have stretched it.
yeah.
You could make me
Anyway,
feel good.
um, yeah, but no, I think we were talking about, yeah, just like generational comfort with like different stuff. Yeah, I mean, look, it could be that like we're part of a generation that is just always going to be difficult, and like maybe the younger generation is just more like natively comfortable with doing stuff on chain, in the current setup. I do think that there's an opportunity to abstract away some of the friction that's currently there. I know there's people working on that. Um,
Yeah.
yeah, because I just don't think. I mean, I just think, of course, like the Bybit hack that was recent and stuff, and you hear about stuff like this, and like, I don't know. I just think that for the average user, it just doesn't seem reasonable to expect the average person to like bear responsibility for this kind of stuff. Like,
Well, it's a big paradigm shift. Alluding to what I said before is that, we spent years convincing, our previous generation to
yep,
move money to an institution that's going to hold your keys, hold your security, hold your passwords, and hold your money all together. So it took a generation for that convincing to happen. Now, this generation, we're now convincing that we need our own keys back. We need to be
Yeah.
responsible for something that we were largely not responsible for many, many decades. So putting that security, putting that user onus on ourselves is something that's almost like it's a lost skill. We're relearning a lost
Sure.
skill to
Yeah.
manage our own passwords and manage our own security. So it does feel like you're growing, a new skill at the same time learning to figure out, what it means to manage your own private keys from multiple wallets, and that becomes, cumbersome. It becomes friction, and may take another generation before it comes back to them and say that skill your parents taught you to manage your own keys. Now they're born with it. Now they're back.
Yeah.
So I do feel like we're building, businesses for the next generation.
Yeah.
To hold.
Yeah, that's a great way, Kenny. That's a great way to look at it, man. I could definitely see that. Yeah, I think you're right. We are building that. Yeah, that's really wise words, man. Okay, so back to SecondSwap. What exactly? I don't think we even said the name of it, except for maybe in the intro.
Oh, wow, okay.
Yeah. So what is SecondSwap?
So the way we came up with the name was like Uniswap for primary tokens, SecondSwap for secondary tokens. There's a
Okay.
large supply of tokens that are in their life cycle that are sitting there are locked. They're locked
Yeah.
for many reasons. And when I say locked, they're basically deposited onto a vesting contract, or they're just held by the foundation and not sold into circulating supply. Over time, the life cycle of a project, as it gets bigger and more well known and they produce more, you release some more into circulating supply. We call it an unlock. And then you starts getting traded. And if it's really, really successful, it gets listed on a DEX or a SEX. A very famous one, maybe one you mentioned, Bybit or a Binance or an OKX. And there's a lot of liquidity that's get attracted because of that. So that's the typical life cycle. But no one's really looking or trading the lock portion of it. Why? Is because it's sitting with the foundation, and it's typically done using liquidity is obtained during OTC type sales, or it's being held by investors, advisors, or employees, in the hopes of locking them creates or for further delay and incentive alignments with those parties to promote and use the product. And it's not a new idea to TradFi. In the TradFi world, secondary markets is a very healthy part of the functioning financial system. And if you think about maybe about 15 years ago, there was several businesses that were conducting big businesses on secondary markets, and Nasdaq actually owns a business called secondary market. So the parallels are quite there. So SecondSwap is our project where we bring unlock liquidity into the secondary markets for tokenized assets.
And okay, so just to get into the nitty gritty on this, so I guess the scenario I'm thinking of for like a lock token is, let's say like I'm the founder of a token project, or I'm an investor advisor of a token project. I receive like a token allocation, but I
Yep.
can't sell the tokens for some defined period of time.
Correct.
Now, typically, how is this managed? Like, because I know how it was managed in my project. I don't really know how it's managed in like other projects. Like, are typically the tokens are they actually allocated and then sort of like digitally locked to the person's wallet at that time, or typically are they just not allocated?
Both.
And-
Both scenarios exist.
And can you manage, like, can you basically support liquidity in both scenarios?
In both scenarios, yes.
How? Explain that to me.
Sure. You want to do your water first? Or
No. I'm gonna just keep talking. It's okay. The audience can
Oh, okay.
tolerate me drinking my water.
Sure. Yeah, the way we work is that we bring all these transactions on chain. So if it's kind of the scenario you described, if there's a token project that's launching something, but it's not yet been deposited into a repository
Yeah.
that locks it, programmatically, they're considered liquid. But if they are deposited into certain tokens, they're locked in that repository. So the easier scenario, if they're liquid tokens, they're sitting with the foundation, maybe in a wallet somewhere, we can have the ability to lock it into a vesting plan and then trade the allocation there on chain. So we have a set of smart contracts that have that trading functionalities, the parameters, the mathematics that allow you to change hands of the allocation from the seller to the buyer, and then having the buyer relist that allocation to trade again. So what it does is it creates this sort of the liquidity curve based on discounts being traded between buyer and seller. It's similar to what's happening with the market today. There's a lot of OTC brokers that are basically trading locked tokens or locked allocations at a discount. That's very easy for liquid tokens. For non-liquid tokens, these are tokens that are locked into different repositories. We have a set of what we call universal adapters that adapt to what we call legacy wallets and help trade or transfer that out. That's something that's proprietary to SecondSwap, and that's something that we do by connecting to as many repositories as possible. We're hoping to make that open source, create sort of that universal adapter. So any project with any tokens locked somewhere can connect in there and trade and reallocate and trade over and over again with us. But we'll have a white paper that's going to be issued out pretty shortly that talks about that. So that helps us sort of target the existing ecosystem and then the liquid ecosystem.
Yeah. Kanny, you got to help me out here because I'm struggling to understand, like, how is it that you can trade the tokens if the tokens are locked, right? Like,
Yeah. I would say the first thing, I mean, it sounds like, just am I picking the lock and getting into your vault and just pulling it out? No.
well, it just seems
I
like
know what you mean.
they're locked
I
or they're
think
not locked, right? Like, what are we talking about? Like,
yeah. I think the first thing is that maybe what you're more familiar with is more a buyer-seller type scenario, where you're just buying off somebody, but it's locked somewhere. We actually work with the token foundations, and where they hold the keys to the kingdom, and where all the different pockets of where it's sitting, we go there and we list the token and we work with the foundations and we make it a tri-party deal. It's not something where you're trading an asset of an asset owner where they're not aware of it. We're bringing them into the equation, making it a tri-party deal. So all the type of legal agreements and SAFs that they have governing, the lock tokens, we help enforce it. It's actually maybe the use of the word lock is not maybe appropriate. All the actions that are governing the asset that's been purchased or been allocated, we help enforce. So, for example, if you look at a common SAF today, where you have a simple agreement for the future tokens, it says you can trade the allocation with consent from the foundation. That's typically, what it says.
Okay,
What
yeah,
we do
is that
we
right?
go ahead and get that consent ahead of time. So maybe
Yeah.
that's something that, sorry, I apologize, I missed in explaining, is that ensuring that we enforce all the governing aspects of that token requires us to bring in the token issuer into the equation. So it allows them to have control. It allows them to manage the liquid supply, and then have oversight as to who's buying and who's selling.
Got it. Okay, so basically, you're working with the foundations as well as the ultimate holders of the tokens.
That's right. Yeah.
To
We first go to the foundation, make sure that they're ready, and they
Yep.
understand that we're helping enforce the rights that they have
Yep.
on chain. And once that is understood and well understood, then now we can now talk to the people that are pledged these assets or allocated these assets, whether it's team, whether it's investors, whether it's advisors. Now that we're listed the token, it makes it very easy for the allocations to be traded, which is going to happen eventually. When it
Yeah.
unlocks, it's going to be traded. It's going to be sold. What we're
Right.
doing is we're just moving that cycle a bit further upstream
And
and opening.
Yeah, and so say me, you, and Charles Tan start a company, right? And we say, okay, it's going to be 33 tokens each, vesting in a year or something like that. And then I go, you know what, guys, You keep beating me at poker. I don't want to work with you anymore. I'm out.
Ah, that's a shame. I think Charles is just too good at it, huh?
Oh man, that was
He keeps bluffing you out,
it
and you
was
keep
like
folding,
I think the only time I
and
lost more money is it was in 2022 market. Yeah, so okay, so let's say then I say, look guys, this isn't the fit. I'm out. So I'm sitting on these 33 tokens. I'd rather get rid of them. So now I go to
yeah,
you and say, okay, Kanny, look, I'd really like to. I want someone else to take on these tokens. If you know anybody that I'm happy to sell them at a discount to the current valuation of our project. Is there anybody that can take these on? So the foundation says, yeah, sure, I don't mind, I don't care if you help move Lawrence's tokens, and then you sort of broker that deal. Is that about right?
this sounds, yeah, more or less. I think one thing is that you're pretty realistic about the price of your tokens. If you're gonna sell it before the unlock, you're gonna have to give a discount.
Yeah.
And the buyer that's coming in and says, "Well, why am I here? What makes me so lucky?" Well, the seller is willing to give a discount, and the buyer has to also hold the tokens until the unlock period. So there's an equilibrium here where you're happy to give it up at a certain price, and there's a buyer that's happy to buy it at a certain price, and we're here to bring the equilibrium using multiple methods. One is a volume-based method. The more they buy, the bigger discount they get,
Yep.
and the time-based discount. The longer that they have to hold, also the bigger discount they get.
Yeah. And
Um,
then, okay, so from the foundation's perspective, though, um, is there a concern? What do they get out of it? Because I'm thinking, like, if I'm the foundation, I'm thinking like, hey man, like I'm trying to give you the chance to lower the price of our tokens, right? Like I may need to raise another round, or I may need to attract new talent, and I'm saying, hey, the tokens are 50 cents each right now, but Canny's like the guy outside of the stadium with the trench coat going, yo man, I can get you 33 cent tokens,
I
like
hope I'm not that guy
yeah.
in the transfer. I hope I'm buttoned up by then. Let me see
Yeah.
here.
But tell me,
Uh,
man, how is it different? How is it not
yeah,
like
I mean,
that?
if you're using that example, maybe I'll liken it to more like a ticket broker, like a StubHub, or like a sanctioned sale, where like Live Nation as an example. There's second markets where people can't make it to the stadium anymore, and they're like, well, I'm willing to give up the price of my ticket, but because of demand, that price is much higher. But because I'm selling it, Live Nation comes in and says, I'll broker a deal, and then find a buyer to come in and buy that ticket off the person who already bought the ticket already,
Mm-hmm.
because there's a price that that person
Yeah,
is willing to give
but
up
they're
because
buying
he
it,
can't make it.
but they're buying it for a higher price, right?
Yes, yeah, yeah, they're buying a high price, but still a discount to spot. So they're not gonna pay the biggest price, because when they buy it, it's because they cannot make it. So they're willing to let go of it for a little bit less,
Uh huh.
if
Okay.
that makes sense. Yeah.
But wouldn't it be
And
no,
and, and obviously the scenario is not exactly the same, because
yeah, yeah,
in the ticket scenario, it's given up right away.
yeah,
In our scenario, the guy has to hold it, or maybe imagine if that concert is 2 years from now.
yeah.
So
Okay.
so you have to wait 2 years.
Yep.
So okay, well, I can't go to it next week. I can't surprise my wife with these tickets. I have to sit on these tickets for the next 2 years
Yeah.
until that day comes before I can
Or
attend the
I could
concert.
sell it to someone else, right? I could go
Ah,
back to
see,
Canny.
that's the secret sauce. So this is
Yeah.
where we come in, is that we can sell and resell and over again until the date of the concert.
Yeah. And so are these all of these like OTC transactions? Like is any of this happening like on chain, trustlessly, permissionless, or
There are, yeah, I would say most of the business today are enacted through brokers,
yeah.
who connect buyers and sellers. I'm not aware of any business that's doing it sort of the way we are, enacting it mostly on chain with physically delivered
So you guys are
tokens.
doing it on chain.
We're doing all
Yeah.
on chain, physically delivered, and it's fantastic. Having security and transparency. And you alluded to something earlier. Are token foundations afraid or aware of this? I would say this is happening with or without me. That price discovery, about that discount to spot. It's there. What we're doing is we're actually helping enact liquidity, moving it into that. And so we're helping move these assets so they can trade multiple times so the liquidity comes in and you get buyers with higher conviction taking over these tokens.
Yeah.
As
Okay.
opposed to somebody that doesn't believe it as much as the next
Yeah.
person.
I can appreciate that.
That's a key.
Yeah.
That's a key thing. If someone loves, you know, our poker table project more than you,
Yeah.
I want you right. Like,
Yeah.
Lawrence is out, man. He's tired of losing his money on Charles poker table. He's
Yeah,
legendary
yeah.
poker table, and someone's like, "Oh, I'll take a spot." Because
Yeah.
he has higher conviction than you, so he'll
Yeah.
buy it in as you. So the poker table actually doesn't want you there anymore because the reality
Yeah.
is that you don't want to be there either.
Yep. Yeah. So it's a better fit. It's a better fit for everybody. Everybody's happier.
It's a
Yeah.
win-win-win situation
Yeah.
because the person that wants to be in, you're making room for them,
Yes.
and I'm helping you trade at
No, Kenny, I
price.
totally get that. And having very much been in this, I understand the situation very, very
Yeah,
well,
yeah.
right?
I'm sure
Uh,
that you as an investor, you as a business owner, you
yeah.
understand that having that liquidity is really, really
Yeah.
paramount
There's
and
just
really
nothing worse. There's just nothing worse than having, the wrong allocation for your token pool, or your like a bad cap table, right, can just absolutely destroy morale at a company at a certain point. So being able to sort of like have some have an opportunity, to have higher I mean, look, I totally get what you're saying. I guess the piece that I find myself like kind of getting stuck on, that I wish you would just try to like just explain to me or help me understand better, is it seems to me that there's still like a rationale. Like, aren't we losing something because there's a reason that the tokens are locked, right? Like, we want, in a sense, we want to limit the liquidity of the tokens
That's right. Yeah.
at that
Yeah.
point, right? Like, that's the agreement. And then what you're doing is basically giving, you're sort of creating that liquidity. It feels like it subverts the sort of the original, idea of like, locking up the tokens in the first place, right?
Maybe one thing you're missing is that the tokens, when they're bought over by the next higher conviction owner,
Yep.
it's still locked. So
Yeah.
there's no impact to circulating supply.
But if anybody can buy these tokens on SecondSwap, and are they like, they're fungible?
Nope, they're still locked. They're-
Okay.
Yeah, you're trading the token allocation.
How can they be locked and tradable? That's what I'm asking.
That's the secret sauce, Lawrence. That's
Yeah.
why we're here.
Yeah.
Why no one has done it before. So,
You got to
yeah,
tell me,
that's-
bro. Make it make sense. Make it make sense, Kanny. I can't be the only one. I know I'm not the
Yeah.
smartest guy in the industry, but I can't be the only one being confused by this. So
Yeah. So all I can say is that it's something that we've come up with a proprietary way of doing this. We have white papers, we have repositories that explain the code behind it.
Okay.
It's all on chain, so you can actually see it in action. We're live on Ethereum right now,
Yeah.
and we're going to be deploying to Solana soon. So all the transactions that are occurring in Solana, I think they own 50% of all DEX transactions now. We're really excited about deploying to them in the next 2 months. So you can see it in action. You don't have to believe me. I can explain all the code. You don't believe me. Just see it.
go
live in
look
action.
at it.
We're
Yeah.
live
All right. I'll go take a
on
look.
Ethereum now.
How
Yeah.
are volumes? Can you share?
It's early days.
Yeah. I know.
we
Like, you
launched
released
up-
literally
yeah,
like, what was it like?
like
2 weeks ago,
Yeah,
right?
yeah.
Okay.
Don't ask
Yeah.
the project about its volumes early days.
Yeah. Okay. Fair enough. Yeah.
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 So we have a go-to-market strategy that's quite different from everyone else, and that's
Yeah.
really working with strong layer ones as a DApp into the ecosystem.
Yeah.
So it's like I said, what we were talking about earlier on, we're building for the next generation.
Yeah.
If we're looking at a very squeezed-in time frame and say, hey, how does it look in the last 2 weeks? I said, it takes time, man.
Yeah.
All growth projects take time. We're in it for the long haul, and when you're building something that's this transformational, I feel um, it'll take time to set in. It'll take time even for people like yourselves to understand. But
Yeah.
it shouldn't work like this. Why does it work like that? Okay, well, let me tell you that the mechanism's already built and it's being deployed. You
Mm-hmm.
now have options, and like, okay, great. Now that I have options, let me try it out. Let me give it a shot.
Yeah.
And maybe I wanted to ask you a little bit, maybe sort of, you
Yeah,
touched upon a
please.
very interesting point
Nobody
about,
asks me questions.
yeah, let
I
me
want
tell
to
you,
be asked questions too. Yeah, go ahead.
you talked about, cap table and alignment with investors early on. I think that's a resonating point with a lot of founders,
Yeah.
people who founded projects. A lot of our friends around Singapore, people that we're not as close to, that we want to get closer to, they'll may say the same thing. The cap table that they had when they first started
Yeah.
isn't the same cap table, in their seed round, in the Series A. As they grow and as the landscape changes, the incentive alignment does diverge.
Sure.
I believe you before, but I believe in someone else more.
Yeah.
And it happens, and they're like, well, what do we do now? You're still stuck here with me because we have a
Yeah.
binding contract. So, well, why keep someone there that doesn't want to be there? Because why don't you make room for new blood or someone that actually does believe in you? And then
Yeah.
you have true incentive alignment in your cap table where everyone's a supporter for your project, but you just have to make room for it. So it does, I think maybe it's a bit of a, a, a thought change as how to approach that cap table. But I wanted to
Mm-hmm.
ask you because you also, own your own businesses and launching a business and working with investors early on. Would you have, if you were given the chance to, switch some investors around
Oh.
or maybe free them up, would you have taken it? Let me ask you, would you have taken it?
For sure. Yeah. Yeah, that flexibility would be great, I would say.
Yeah, yeah,
Not just investors, but yeah, I mean founders, advisors, for sure. I mean, yeah, it's a bit of a tough one. I mean, I think because part of it is when you put somebody on the cap table or the token pool allocation, early on, there is this sort of vulnerability where you're going like, okay, like it's a commitment, and it's two ways because you're asking for commitment from them, time, energy, care, and stuff, and you may not deliver anything to them, but then in reverse, you're offering them something that you certainly believe has value, and it's unclear whether or not they will be able to, they will deliver that value in return, and I think that it's not uncommon because I've had two businesses now, one crypto business and one traditional business
hmm
that had different people on the cap table, and yeah, and I recognize like things change, and it's possible to have a situation where it would be helpful to have that flexibility, to be able to shift things around, right?
right, right. And if I told you, instead of shifting that cap table to from one investor, if I said that you can have 100 people taking over that same allocation,
Hmm.
would that have been interesting? Because all 100
Sure.
people
Yeah. Why
have higher
not?
conviction. And because in the world that we work in for tokenized assets, having a wider distribution of users who are essentially you're also investors and having that alignment makes
Yeah.
a lot of sense for our type of businesses. And that's what
Absolutely.
we're doing as well. So we're engendering more flexibility. We're increasing distribution of ownership because we can fractionalize lots and putting this all on chain. So the new investors that are coming in, they're happy because they're buying at a discount. They have fractional ownership, so they're not owning
Yeah.
large swaths of it. And you want more people to hold your token anyway.
For sure.
So
Yeah.
we're achieving the same things that you want that are not being done the same way today. People do things like they give it tokens away for free. things that we call airdrops. You drop that token literally for free to different people, but what they do is they just sell it. Why
Yeah.
would we want to do that? Imagine you have someone buy it at a discount and they
Yeah.
become an owner as well as a user as well as a customer.
Yeah.
They're in it for the long haul. Why? Because they're also locked.
Yeah. But they can sell it.
They can sell it. Well, again, this incentive alignment will change for them as well. So
Yeah.
we're not here to say that, they're not gonna be your investor for life. They can be if they want to,
Yeah.
but if circumstances change for yourself or for them, and they want to, realize their position or they want liquidity for it, and you want liquidity for it, we're here to help engineer that. And
Yeah.
that's essentially what SecondSwap is.
Yeah. Kanny, I love it, man. Look, it's been great chatting with you. We're kind of coming up on the hour now. Is there anything else that you want to share with our esteemed audience in the Hong Kong and Singapore crypto chatter WhatsApp group and whoever looks at my LinkedIn profile?
Like yeah, maybe a shout out to, all the guys that put all this together. Like, just seeing it early days and grow and grow and grow and grow.
Yeah.
There's a lot of good chatter. There's a lot of good people,
Yeah.
across Hong Kong and Singapore. I love the fact that we're finding more and more ways to connect outside of business. We're doing bowling, crypto
Yeah.
bowling now. I play a lot of golf with a lot of crypto, friends, guys like CJ, Carlos, Lasanka. Like, these are great guys that
Yeah.
we just spend a lot of time with. And I love to explore things outside of business
Yeah.
sometimes, and because we're humans after all.
We are,
Right
yeah.
now,
Yeah.
until the day we come digitized, and
We merge, right?
product and bot. So yeah, I would say let's continue building this community. Let's
Yeah.
look for interest
Thank you.
outside of crypto. It doesn't have to be the same conversations. I'd love to get to know more and more people on a one-on-one basis.
Great. How can people reach you?
You can find me on Twitter, LinkedIn, Telegram. I probably won't give up my Telegram here, but yeah, I'm in the chatter groups, and you can find me in Singapore all the time. I'm also
Yeah.
going to be doing a big sort of like a pretty healthy road show the next couple of months,
Yeah.
traveling to mini conferences. So yeah, it's time to
Very
to
cool.
showcase the project. Yeah.
Yeah, awesome, man. Okay, so we'll put some links in the show notes. Kanny, it was really great speaking with you, and I hope everybody's enjoyed this conversation.
Thank you, Lawrence. It's been a pleasure.
Thank you.